Welcome to successfultradings.com. This is Telex here again. In today's video, we're going to spend the next 10 minutes or so to talk about understanding gaps in stocks. So by the end of this video, you are going to learn about what's a gap in stock price, how to find gaps, and what causes gap in stock price, because there are a lot of them and shouldn't be afraid of them. Actually, we're going to discover that that's a good thing. And finally, I will share with you how to trade gaps in stock prices. So without any further ado, let's just go ahead and get started. So let's just let me put this in presentation mode on here just to show you our overall menu that we are going to be going through. I'm going to be illustrating all of these things through the chart, because that's where you see exactly what a gap is. It's not that difficult, but you just need to understand it and master how to make money in options with them, because there are a lot of opportunities. Okay, so here let me bring in TradingView. I'm going to share with you very basic example using SPY, because our most beloved ETF is actually the master of all gaps. For me, the last year, 2019, and then even 2020, it seems as if all that SPY is doing is from one day to another day gapping. So what is gapping? Gapping, it's simply a skip of price. So meaning that between the close on one day and the next day, the prices either jump, we're going to call that a gap up, or decreases by a given amount, and we're going to call that a gap down. So here's a chart of SPY in TradingView. Let me show you plenty of gaps. So on this day, we close at 311.64. I'm reading the close in here. So, and then the next day, we open on December 3rd, 2019, we open at 308.65. So this is a gap down of how much you subtract 308, the open price 308.65 minus 311.65. So this is a gap of $3, about 1%. My friend, I can tell you that this is 2 consecutive days, right? December 2nd, December 3rd. And I'm trying to find out what day of the week that was. So the way that I know that, so this is the 29th, this is the 2nd, this is a Monday, this is a Tuesday. So since SPY trade every day, so overnight to make money out of this, you will have had to take puts on this here at close and make it on there. I'm going to talk about that as a strategy, because that is strategy. I've suggested that on one of the blog at successfultrading.com. So I invite you to take a look at that. I think the article is on how to make money trading SPY, or SPY trading system, or something. Look, search on all the blog, you will find out. Here's another gap. There are plenty of them. So on this very year, in 2020, SPY closed on this day at 328.77. The next day, it gapped down because the price here is much lower by how much? Almost $5.77. And this one, 24 to 27, this is a Monday, my friend. This move from here to here, it's on a Monday, so you will have woken up that morning on Monday, depending on your time zone where you're trading. I usually trade from California. I'm not currently in California, as I've told you in most recent videos. On decent money. This is a Monday. My friend, before I go and show you other example, I'm going to take the opportunity that here, I actually trade this very setup this past Friday. So meaning that as we are looking at it as of now, if I go and show you the futures, what they are looking like, I'm just switching to Finwiz here. That's another app that I've reviewed. So for you guys, you know that. So I can take my futures off of Finwiz, or maybe TradingView, or investing.com. That's the app that I use on my device. So here I'm on a computer, so I just go to futures here, and I'm gonna indexes. So what I'm recording this video, it's nighttime in the US, but in this side of the world where I'm at, it's actually daytime, and this side of the world across the Atlantic is the market is open in Europe, and I'm going to show you what's going on in Europe. So here are SPY future on here. As you can see here, they are not pretty. The market is gapping down by over 2%. If I go to my maps and I go to international in the world, as I've showcased you, so in Europe, things are not the things are not gelling that well. The indexes, for instance, in Germany is down almost over 3%, I believe. Let's try to find Germany here. So Switzerland, here's Germany, okay. But the DAX itself, okay, here's the DAX. This is what's happening. This is Deutsche Bank. This is not the DAX by itself. But you get the idea here. The markets are trending down. So all of that, I was trying to showcase that. I've noticed a pattern here recently on Mondays that I traded on SPY. How did I trade it? When I'm carrying a position overnight, no matter how confident I am about my study, I always hedge. Meaning that here, actually, my bias was on puts, so I took puts, but I hedge with calls. I invite you to have that discipline. You don't want to say, oh, I was right or wrong. You want to be making money as a trader. So for me, I'd rather be wrong, but my account having as much success as possible. So for me here, I had a hint that based on these last 2 days and based on patterns, how SPY has been trading, I showed you this candle, I show you this other candle, and here there are studies where you can study Mondays on here what has been going on. So SPY right now, it's in the futures are showing that it's going to be opening very close to this level. So those puts, I'm looking forward to seeing how much they will be showing me in about 5 hours or so when the US market open. So that's just a parenthesis here. Let's go back to our gap and the reason that gap can occur. So how to find a gap is a skip in price, either a jump up or a jump down. I showed you a couple of jump down on SPY. What causes gap? So for SPY, well, there's really no reason. We don't have any explanation of why this gap happened on SPY, just because, hey, the market maker, they want it like that, that's fine. On singular stocks, when I'm talking about singular stock, meaning stock like this, SPY is an ETF, right? So gaps typically happen at earnings. That you need to know. And I've shared with you many times, with you guys many times, I don't trade earnings before. I wait for the gap either up or down to occur, and I trade after I have the direction. Here is an example here on Netflix. Netflix is known to have these gaps up or down during earnings. The most noticeable one is this one here. Back in July of 2019, we closed before earnings at 362. After earning announcement, we jumped down to 323. So those who traded it here before, they made some money actually. My friend, I have one of you who recently actually traded something beforehand. I think I remember that stock. The stock is Amazon. So I'm going to show you how my friend Ali made some serious money doing something relatively risky. Here's a gap up on Amazon. This gap up paid a lot. You can ask Ali on the channel that he bought calls somewhere here for maybe the contract were $300 per contract or two. They were going on for over $50 at this open on this day, most recently on January 31st, this year, January 31st, 2020. So this is an example of gap up on earnings. So I showed you a gap up on earning here on Amazon. We can go back here. This is a gap down on earning on Netflix. And typically, the rule of thumb, what I've noticed is that these major gaps, they will take a lot of time to be filled. A gap being filled means simply that price action will evolve to go back to where they were. Look here how long it took Netflix to go back to this price level. It took Netflix almost forever. So from July all the way to recently, when was the day that it traded back to the level of 362? Somewhere here in February. So the rest of the time, this price just kept asking. This was bad. This was bad. I remember I made some money on trading here on these days, and then we had this head fake. So my rule of thumb is that when a stock has a gap up or down, put it on your watch list. It's a great opportunity to do something that we talked about in the previous video, scalping. Whenever there is a gap on any stock, starting from that day of the gap, do not feel as if you have missed, because if you wake up on a day like this and you see this, you could say, oh, I should have taken puts. No, don't worry. You're going to have an opportunity to trade this, scalping it for several days. I will do a video about some research about how many days, some patterns that I've noticed on here. But for the time being, your takeaway is that gaps actually are good for you. I'm going to show you another gap, another reason for gaps here. Gaps could be, for instance, due to a company issuing an earning warnings. Apple did that last week. On last Monday, the price recorded a gap from 325 or so, 324.95 close, and it opened on this day at a price of 315. People who had puts overnight, they took a risk, but they made money. I didn't have that, but I remember that I traded Apple afterwards. I had some scalp somewhere here. I think either the same day, I believe, because typically one of the patterns that I've seen as well. So we gap down, and then on that day after the gap down, we rally. Actually, that has been a consistent pattern. You know the correlation that exists between Apple and SPY. If you look at the charts of the daily chart of Apple that we are looking here, you can see some great similarities with SPY. Okay, I've shared that correlation with you guys. Another reason for gaps, as we talked about, either earnings, upgrade, downgrades. I shared with you example, a recent video on Micron stock where I scalped and I made money on upgrades. So downgrade works similarly. Some other instances of gapping are dividend increase, dividend decrease, buyout. Obviously, on a buyout situation, a stock will gap up and stay at that level. An example, let's go try to find you an example of a recent gap up. I think E-Trade Financial Corporation just did that. Don't ask me, I just skip a praise of this thing. I actually didn't study this beforehand, but E-Trade, I believe, did that on a buyout on a buyout announcement. Here we are, major from $44 to $55. So this is a gap up on a buyout. So I believe it's Morgan Stanley that's buying E-Trade. I'm not sure if they decided, if they are rejecting that offer or what, but so because the price here didn't stick, it's actually coming back down. So I'm not sure if that bid was rejected or no. So meaning this is an opportunity to trade. It was an opportunity to trade on that day. At the open, it opened at 55 something. You could have scalped all the way to 57, or you could have shorted if you wanted. You short at 56. And we close at 53, so that money there. This at the open in a few hours, and this week, this is a stock you can trade it. E-Trade Financial is not a very liquid option, so I personally do not trade it. I do not trade it. I just wanted to show you an example of gap up in price. Lastly, what other type of gap ups do we have? So bad earnings, stakeholder position increase. What do I mean by that? Stakeholder, the main stakeholder in stock that usually make price move. It's Mr. Buffett, Mr. Jimmy Buffett, and his partner. So recently, I wanted to share this example with you on a stock, Kroger. Kroger last week, Jimmy Buffett announced that they have increased in the previous quarter because they have to do a filing, an SEC regulatory filing. So after revealing that they have increased their position in this stock, the stock jumped from 28, which, I mean, this stock has been just a dull stock, to be frank with you. I've traded it here and there very sparingly, but on this day, I traded it. Would you like to guess which direction I traded it? I actually traded puts on this day because the price, why is it doing that? The price on that day, if I put my 15 minutes, and we're going to conclude on that, I'll change the chart to 15 minutes. After the price jumped, here, the RSI is relatively high, so this showed me that, the moment, this is the candle that showed me that we were going down. So I traded this from maybe some point here. It was a decent gain, guys. It was a decent gain. I think that was my major gain on that day. So this is a very example of how you can actually trade gaps in the pre-market. You just open your watch list. You will see stocks that are gapping up. There are plenty of stocks that gap up every day, and that provide an opportunity for option traders to make money. The thing to focus on is not to say, oh, I've missed out on the gap itself. You will find an opportunity because we know that for option traders, we want volatility, meaning we want movement. When a stock doesn't move for an option trader, we are losing money because data, as we talked about in the article, as time passes by, the price of the option will decay. So we want either a stock going up or down. You don't care. You should never be in a situation where you're saying, oh, I am a bull, I only trade calls. I think that you are limiting yourself, really. Or I'm a bear, I only trade puts. No, you trade whatever the charts tell you, whatever your study tells you. So that's when scalping is great, because if the market it's trading up overall, you go with the trend. The trend is your friend until it changes. So that's an old saying in tradings. So that's my recommendation on here on how to trade gaps. You know that the stock will be moving because bears and bulls will be pulling in either direction, and you find a nice setup, you will be able to make money out of it. So I hope you learn about this video on how to understand gaps in stocks, how to trade them, and leave your comments, make suggestions on the type of video that you like to see, and I will continue to cater the content of this channel to your liking. Thank you very much. Have a great day and talk to you soon. Bye-bye.